Okay, everybody, good afternoon. To European friends, good morning. To Americans, good evening. To Asian, Oceania friends. Not able to stick to a regular stream schedule. My daughter's a bit sick, so been managing that, but we'll get through it. Not going to be too long of a stream today, but I want to go through a few things based on what I'm seeing. The price could fall. Okay, the price could totally fall down to a level that's pushing zero on this curve. The dollar price is one of the strongest trends that we have against Bitcoin. I'm not saying it's going to happen. I'm just saying prepare yourself in case it does. You know, if you look here where we are today, and I think we're a little bit higher than that right now than this number painting. Yeah, just $100 higher. You know, if we fall into a deeper bear, if this is not a secular bull, which I originally thought that it was, I would still use these guides as your lowest levels, right? Because this is a power curve. Bitcoin is not an exponential curve, as you guys know, that I always mention. But I want to look at some other things today, some other growth trajectories to see where we could possibly be. You know, even if we go out, if we assume the 4-year cycle and we even dip from the 4-year cycle, all right, then it still puts us to what you might expect at the end of next year. Although a little bit lower, sorry, but a little bit higher than one might think because of the prior cycle high, which was 68, 66,000, right? Back in 2021, 70,000, I guess it was. If you look here at the 0th percentile in November 2026, you get to 80,000, right? People have been asking me about the stability of this curve. It's generally pretty stable, all right? I've shown you a few different ways to look at this from the stock to flow variations from 2016 versus the power curve variations, and obviously the power curve blows it out of the water. Stock to flow is just not a scale invariant beast. The power curve is. All right, but that's if we assume that it sort of follows this trajectory that it has during the past retail booms and busts. I'm not saying that's coming at all, but it could. So be prepared for it. All right, but these are your levels where it could go down to. All right, and again, if you want to know how well this thing has held up, you simply compare two different trend lines. So we'll quickly look at this one. I got a bunch of stuff to show today in the limited time that I'm going to stream, but let's ignore that for now. Remember, it's Plan B's, just wacky calculations. All of them are bunk. Bitcoin's not exponential. Otherwise, it would be a straight line here. It's not exponential. So if you look at the ongoing, the best stock to flow you could calculate, which is not using wacky coefficients like gold and silver layered into your model, it's this. Okay. But then you have to ask, okay, well, really, besides, you know, if this thing sort of conveniently or not lines up with the tops or this mid-level here, whatever it might be, doesn't really catch the bottoms, obviously. How did it look compared to what this thing would have represented with actual data, say 10 years ago or 9 years ago, right? And that's this. This may look kind of close, but on further inspection, you see that it's at least $200,000 off, all right? And that will get more extreme as we go up this log linear chart. Let's do the same thing with the power curve, all right? Here's the power curve with all-time data. Here's the power curve capping the data ingest through 2016. Did you even see it come up on the chart? $6,000 difference. $6,500 difference. All right, so one of these is a good model, one is not. Stock to flow is not a good model. Power curve is. And as many of you know, Giovanni and I have been talking about this since, at least regarding Bitcoin's price in time, since 2018. It's a good model, all right? It could obviously and always, let's say, break, but you never know the future for sure. But if you look at trying to layer over what Bitcoin is doing, it's what the power curve says, all right? Now, notice how I said the dotted line hasn't been fed any new data since 2016. All right, so where is this line relative to the dotted line? I said 6,500 off relative today, but it is above or below it? It is below it. All right, so the year-end value of the power curve today would be 125K. If we use the data up until 2016, it's 132. Now, what would we say empirically about, or even anecdotally, about what happened in the pricing market activity of Bitcoin pre-2016? It was more volatile. All right, it was clearly more volatile. More retail, more stuff going on. And indeed, it would be a steeper power curve. It would be, if you drew like different lines at different times, which I've also shown, they've been way faster, way larger power exponents, right? The exponent of the power curve be way higher. Right now, it's a little bit less than 6. Again, what it actually means, the whole formula, if you untangle it, it just means that it doubles every 12.8% increase in the life of Bitcoin. The power curve will double. But it was even faster back then. So it was growing faster. But because of the dampening of the price action, all right, it slowly pulled the number down. But it hasn't broken. It hasn't broken. For sure, we've hit it here already 3 times during this bull run. And we're having, I can for sure say, an unexpectedly low number, specifically right now for the 4-year cycle. And this may be it. Look, it may go back down. But to talk about it breaking or something just because the price has been a little bit low this cycle, or let's say a little bit more on target this cycle than prior cycles where it's been, way under, then over, way under, then over, under and over. No one can predict the future exactly, but that's how it works, and that's why it hasn't been broken. I could show you more detailed analysis on this, exactly like where's the lowest point. I don't think we've hit it yet, but we're getting close, by the way. So, usually we could be pulling the curve up, pulling it down, pulling it up, pulling it down, wherever the price is. We're getting close to where this black line is, in fact, like an all-time low. All right, that's true. And if this was the bull, and now we're going into the bear, then that would continue to pull this down. But it's not the end of what the power curve means, or that Bitcoin's not a scale invariant asset that grows like a network. It's not the end of that idea. It's just that it's going to grow a little bit slower. Hello, Bitcoin Polska. Good evening to you. Okay, so that's one thing. All right, and yeah, we're at a discount. Let's go back here and let's look at. Sorry, remember I thought we'd be talking about these levels exactly this time of year, but we're not. That's okay. All right, right now, worst performance possible would be 57.6K. Could it go there? Yes. Is it historically low relative to where it's been? Yes. I was on Marty's show a couple weeks ago. We were right about here. All right. The 30th percentile. All right. So some of you saw that soundbite they were clipping of me. That's the historically speaking, we still have a 70% chance that we're going to be above this level as we move forward. 70% chance. All right. And of course, if we're in a secular bull, we would expect to be moving higher. We might not be. It's possible we continue to break down. There are other things we need to look at, but that's possible. Now, if you look at it in terms of gold, it's even more interesting because gold is just screaming, Bitcoin is lagging. All right. So the question is, how cheap could Bitcoin get for the gold bugs? Because look, no matter how rough the sentiment might feel on any given day, if you notice, this curve always goes up, and it's going up at a pretty fast clip. Let's find the exact in gold ounce. 0.05, 5% of an ounce a day, roughly. 5% of an ounce a day is what it goes up at. Now, of course, the actual price is not going up at these nice smooth lines. It's not. That's life. But modeling it out, we can still see that this is a very good curve, way better than, for example, this curve, this curve, this curve, which again, by the way, I still need to do an exhibit about this, but these curves, these old stock to flow curves, sorry, not these, but these, which are even wackier, give you crazier numbers. These were modeled using the trajectory of gold and silver as a target, the way that gold and silver grow, which is completely antithetical to Bitcoin because Bitcoin doesn't grow the way that gold and silver grow. All right, now I want to talk about money. I haven't released the full third quarter yet, but this is still about where we are. Global money is super light, okay, as far as central bank print, based on the life of Bitcoin. Okay, these are monthly prints. They don't really, I mean, some central banks give you even daily, actually, but most will give you monthly, maybe weekly. All right, so if you add it all together, $27 trillion. Sometimes I extend this to today as an estimate. I'm not going to do that anymore. I'm just going to show you sort of where I know for sure based on looking at the numbers where they've been. So 27 trillion, still down from 30 trillion. Question I want to show you today is the relationship of Bitcoin between the money supply. Talked about it a lot, and I've shown very many charts of it, but I want to see again, can we derive sort of an estimation of where Bitcoin's going related to global money? It is, by the way. It is crazy that 57K would be the lowest. And yeah, you're looking at the 200-week moving average. I need to show more of these. I actually don't have any ready to pull up for you, but I need to get those ready. Yeah. Preston's good. Preston's very logical about this stuff. So, you know, this is just how they do it, right? Like during our silly season 4 or 5 years ago, we were at the top end of this money print, right? Still coming off of the levels of QE3. All right, if you do a quantile analysis of base money, and now we're at the low level. Now this trend is of course only from 2008, but that's what it is. And I'm mixing trends here, by the way. So these are quantiles, which have their own curves based on wherever the data shows, and then this is the OLS, which is theoretically maybe a little bit stronger overall number, but they all have different slopes. Okay, 91% R squared, 7.9% CAGR, which is actually slower than the 50-year or 55-year track of this, which is over 10% in dollar terms. So that's kind of interesting too. This is the money supply that's most comparable to Bitcoin. All right, so central bank balance sheet is the printing press. Now let's look at how does Bitcoin compare with this chart. All right, so this is the global monetary base. Now let's put the market cap against the global monetary base. Do a multiple of it. Okay, and we'll layer in Bitcoin's price as well. And here's where I have to just reiterate what I've said again and again and again. So the bands, by the way, are on the multiple. The multiple here is in green. The price now is in black. Okay. And what's the multiple? It's Bitcoin's market cap divided by the global monetary base. So it's kind of the global penetration of Bitcoin versus base money. Bitcoin, back here in 2013 was 0.1% of the base money. In 2017, it got to almost 2, but I don't think it hit 2, depending on how you measure it. Now we're much higher. But let's just answer one thing very clearly here, and you can see it if I put the price on. Is there really any secret between where the money supply is and where Bitcoin is? I would say no. Okay. Here's the multiple. Here's the price. Almost exactly the same. All right. And what I mean by that is what I've been saying for a long time is that the money supply, economics, the interest rate, the real economy, that's 5% of what Bitcoin is doing in the real world. 5%. 95% of it is just growing according to network adoption. This is 95% of the story. Okay. We could put an actual ratio on what percent. Let's actually go here. The ratio now of market cap to global base money as of September 30th, 8.4%. By the time I come out with the report, which I'll put this in the report, like maybe slightly different, but this is most of the currencies. It might change a little bit. Central banks take a while and revise, always revising their money supplies. So maybe you can say 8.4% of what Bitcoin does has to do with the real economy. But the rise of Bitcoin is not really correlated with the money print. It's not really correlated with even price inflation. I know we talk about using Bitcoin for our purchasing power and stuff, but it's a wild ride if you want to look at it that way, because the price here, 63, 67, 68, I think it did get up to 70K, right, in 2021. Can't even remember now. Inter-exchange. Intraday on some exchanges. You'd be getting $70,000 per Bitcoin here. All of a sudden, here you're getting 15,000. In any normal real economy, that's kind of banana republic levels. Wouldn't necessarily want to say that I'm using Bitcoin for the protection of my purchasing power with this kind of volatility. But that's what it is. That's why we're on for the ride. It is volatile. It is scary. But it's a new asset that's doing things that no other asset has had the capability of doing before. But you can clearly see, what does this green thing look like? Right? This is just layering on Bitcoin with the global monetary base. Right? Here's the actual printing press. If you layer it on, you don't even see the printing press. You just see this is Bitcoin's price. Right? You can clearly see it looks like Bitcoin's price. How can I see it? Well, let me just layer it on for you. The market cap is, it's identical moves in the market cap relative to the price. And I can't really say, they printed and then Bitcoin's price went up. These ratios may make more sense in that perspective, like they printed and the price went up in the future. But right now, that's not what you're seeing. If you take away all the noise, all the talk about interest rates and the economy and who's going to be the new Fed chair, you're still seeing an asset that is growing at about 40% per year. That is what the curve grows at right now. And that is a decline in growth from here when it was growing faster. But that's how networks become adopted. All right, so that was base money. Now let me show you broad money. All right, I see people doing this all the time on Twitter, comparing Bitcoin to broad money. And is this actually it is here's broad money. Also, clearly exponential. All right, take away some of the lines. Let's just see the extremes. Okay. It's growing a little bit faster than base. All right, so here's base money. Again, it's like way low historically relative to the trend during the life of Bitcoin. But broad money, now what is broad money? It includes, actually I got to change that, don't I, on the description. Sorry. Broad money is all deposits in the financial system. All right, and crucially, broad money is going to include M3 and above. Okay. So I'm going to refresh this so it will look a little bit better. Here's broad money. M3 and above. I know there's a lot of charts on Twitter, a lot of people that are showing whatever M2 is doing in the US might be what Bitcoin does. It's not enough. You got to look at the global money supply and you got to look at the broadest money supply, because M2, what's the definition of M2? It's all deposits in the retail space. All right. Private customers, small customers, time deposits, demand deposits, retail money market funds. Does not include repurchase agreements, euro dollars, institutional time deposits. Now, you might be wondering, well, why don't I see M3 a lot on Twitter? The answer is the US doesn't publish M3 anymore. You have to, there is data that you can get for it, but it is difficult to compile, and it's also only quarterly, some of it. This is why it's even slower. This is why I have this going to June. I think it's this week that the Fed will publish this, so I can come back to you next week, finally, in December, where I can give you this through September. All right. And I'll show you the breakdown of, Chinese yuan, Japanese yen, whatever. But this is the global money supply on a broad scale with all the different, forms of deposits, both retail and crucially institutional. All right. You can see some similarities. Obviously, the silly season pump here, we're at the extremes. Same thing during QE 1, 2, 3. We're at high levels worldwide. Again, this is worldwide. This isn't, just US. But we're a little bit higher than, say, the low compared to the monetary base. All right. Monetary base, which is central bank money, which is the most analogous money to Bitcoin, is here. Broad money, which is all deposits in the financial system. And this is a rough number, by the way. This is definitely understated. It's going to be higher than this, but it's the best as I can give you. Here, $140 trillion. All right. So let's do the same thing. Let's take the Bitcoin market cap divided by this and see if we can glean any information about what Bitcoin's doing. All right. Let's go back to the old times to see. Let's put Bitcoin on log scale. Oh, looks just like the price, doesn't it? It rounds to zero, the actual numbers, 0%. That is, Bitcoin is a percent of broad money, but it's, so the ratio just looks like the price. Now let's go to the present and see what we can see, if there's anything different. It is a little bit interesting that, again, this is not connected to the analysis. I'm just overlaying price. But because of scaling, you can kind of see how Bitcoin, I guess it doesn't really matter, I was going to say. It looks higher here too. Roughly speaking, Bitcoin's a little bit lower, but not much against broad money than base, because base money is historically low. So look, I'm looking at, say, the actual trend line. We'll get back to the overall point, but I just want to show you. The multiple is 8.4%. The trend is 9.4% on base money. Now broad money, the multiple is 1.5%. The trend is 2%. So you can see that Bitcoin struggles a little bit even compared to base money. So it's 75% of the trend here. All right, that is, the trend is 2%. Bitcoin is actually 1.5%. So we're 75% the trend compared to the monetary base, which is way low historically. We're 90% the trend, something like that. That is 8.4% divided by 9.3% is 90%. So theoretically, we're, this is, again, you're pulling levers, but doing a little bit better against base money than we are against broad money. But what's the overall point here? Does the broad money supply tell us where the price of Bitcoin is going? It's just the price of Bitcoin. Clearly, no. You can see that the green here looks exactly like the black. Because as I said, 90% of what Bitcoin does has nothing to do with what Jerome Powell is going to say or did say yesterday or is going to say a month from now. So this is, again, another thing to take comfort in if you're looking at Bitcoin to be an asset to protect against whatever may come in the future, Bitcoin is still a very, very, very significant outside money, completely outside, independent of the financial system, and still so small that the financial system, whatever it does, has no effect on like the ratio of Bitcoin's size to the financial system. The only thing we can say about a trend like this, that is Bitcoin's relationship to the money supply, is roughly the money supply goes up, roughly Bitcoin goes up. You can sort of try to plan around it, but it's the same idea as this, what we've been looking at the whole time for years and years and years. This is why the power curve is such a significant, not only tool, but just illustration of what Bitcoin is doing. There's no secret that's being unlocked by looking at the money supply. And look, this is coming from someone who's been tracking this for 8 years. This is the most analogous money supply to Bitcoin. Okay. And by the way, if you go out on the trend, you can see when we're going to get to 100%. It's going to be slightly aggressive doing it this way, which also just shows you that there's damn lies in statistics. So it's a pretty good R squared, right? But this is early. Notice when we get to 100%, 2034. Those of you who follow me regularly know that the actual number is probably going to be something like 2041. And that's because if you do too many regressions, you might run into issues. I'll show you what I mean. Remember, Bitcoin moves in a power curve. Money and gold and silver in the stock market moves in an exponential curve. When you combine them, you'll get a power curve. It's a different slope, it's a different thing, but it's a power curve. But the combination is arguably less, it's a bit more static. The combination there is a bit more static than just looking at the pure growth of Bitcoin's price and growth of the money supply. Why? Because they're independent. They're completely independent variables, one from another. So I'll show you what I mean. We've shown this earlier, but if you run a projection out on the two different assets independently, and this is, did I do base money or broad money with this? Yeah, it's base. All right, so again, look, this got to 100% by 2034, and that is the ratio. That is doing a regression on the ratio itself, all right? Looks good, looks plausible, all right? But if you actually run, do I want to show this in log scale? Okay, here's another way to do it. Now let's look at this. Same chart, but I've overlaid them actually together with their actual numbers in dollar terms. A lot going on here. All right. Bitcoin, 8% of the global monetary base at the moment. If I do that, there you can see Bitcoin moves in power. The monetary base moves in a straight line. And then let me just take away all the noise of the percentiles, and we'll just use the OLS. So now when would these meet? This is arguably the better way to do it. A little bit later, 2041. So this is a projection of the ratio itself. 2034 gets you to 100%. And this is a tracking both trends. That is the global monetary base, which grows at 7.9% per year since 2008. Actually faster if you look longer term. And then tracking the growth of Bitcoin's monetary base separately. You get a different number, a different intersection point, which is more conservative and probably more realistic. Keep the variables separate. Just do your statistics on separate variables and then see when those slopes intersect. So we got some time. This is why I have a lot of comfort. I mean, look, if you don't need cash, if you don't need to cash out into fiat tomorrow, use these dips or sales below fair value, below the power curve, to your advantage. I'm a big disclaimer guy, never financial advice, as you know. But the trends are clear. And there's no asset in the financial system that moves like Bitcoin does. So it's really, really interesting. Let's look at volatility really quick. Volatility, 2/3 of the time stuff. All right, so here's just to show you to start out, obviously the percentage moves can be huge. 173% daily percentage moves for Bitcoin, right? Back in the day. Let's take away the daily change. Now we just look at it as their positive numbers, always. Just to define volatility, what does it actually mean? It means 2/3 of the time, all right, 1 sigma, price is going to go up or down by the number you see, up or down. That's why it's a positive number. So back in the day, you could get 73% vol. September 2010, price would move up or down 73%. And it's come way down. Let me take off 365. Let me even take off 30-day. This is daily vol. So even with these crazy moves, because of the way that, the system is sort of growing, the vol isn't huge. 7-day vol, 2%. Sometimes we have big blips. But not, 20, 30, 40, 50, 60%, which we had back in the day. Let's smooth it out. 30-day vol. Two 2.5%. This is a daily volatility, but in that window. I should say 30-day window. And then this shows you the overall daily vol in a yearly window. All right, so even here, when we were screaming to all-time highs twice in 2021, the double top that threw everybody off, including myself, double the vol than we had today. Double. We'll explore more of this one in the future. Remember, follow Sminston, but the copper-gold ratio is an interesting one. Even if this does near a bottom, kind of like the BTC gold ratio, it's not showing that we hit all-time highs the day after. Right? It's going to take some time. And this was from a month ago, late October. But this is another interesting ratio to explore. It's kind of a counter-cyclical type thing. And then this one I just liked. So here's Sailor. This is Bitcoin Mena, I guess, right? I think BTC will rise to about 30% a year for the next 20 years. My friend Steven, the power law says if by about 30% a year for the next 20 years, Sailor means the expectation value per annum is almost 40% now and gradually falling to under 20% 2 decades from now. So Sailor many times now is basically quoting the power law without admitting it. I think he probably didn't know about it at the time. That he says, you know, all your models are broken, and then he made a model. But just so you can see, again, what's actually happening. The power curve, of course, means that we have a declining return representation. But that declining is starting from a very high number, and we're nowhere near matching, say, what the rest of the financial system does. But this is a question that I still have, of course, in the future, because at some point, either Bitcoin is going to turn the financial system into a power curve, or Bitcoin is going to be pulled into an exponential curve. Come on, it's a bit slow here. This is one way to look at it, basically. So this is a chart of if you bought at any point and sold at any point in the future. So obviously, if you look back in time and you bought at either 24 cents or 33 cents, the trend line, you'd have 134% CAGR from then until now. That means per year growth. Pretty wild. But of course, that comes down. All right, let's just even look at the curves themselves. So here we are right now. No, sorry, right. Now, this one gets a bit confusing because it's before and after today, but if you hold Bitcoin after buying it like from today, you see a bunch of 30% there. Goes down to 20. So if you bought Bitcoin today on the power curve, not at the actual price, but on the power curve, 92 million in 2062, that would be a 20% return per year. That's what it would represent if you held it from today until 2061. This one's a little bit more ongoing. It will show you the trailing 12-month return, which drops off steeper. But let's just take the actual and just look at the curve again. So this is the trailing 12-month growth. So today, we're at about 42%. That is versus a year ago. Trailing 12-month growth. All right. And of course, we're under trends. We're actually less than trend. We're not doing trend line growth, which is 42% a year. But if you go out 20 years, %17. So from 40 to 17. It's the actual numbers. 40 to 17, Saylor says, splits the difference. I think BTC will rise about 30% a year for the next 20 years. Technically, if you want to average it, you got to look at my Kager chart and go out 20 years. So he's actually optimistic by 5 percentage points. He's not going to tell you he's looking at the power law chart, but he is. If you want to average it, you buy Bitcoin today, and this is even at a premium, right? So Bitcoin's cheaper than this. But you buy Bitcoin today, 123K trend, 40% per year, and you hold it 20 years. What's your Kager? What does it say there in the tooltip? 25.7%. So Saylor's are slightly optimistic. It's 25% Kager over the next 20 years. I do think it's funny that he's kind of started off the whole thing by saying all your models will be destroyed, and then he started making models. Look, we can go down, guys. We can go down. No one knows the future. No one knows what's going to happen over the next week, month, even year. But these are relative levels of risk. And it's all about this curve. The money supply is secondary. All right, the fact that Bitcoin is 8.1% of base money when the trend line should be 9.2% is always interesting to see where we all are, and it's interesting to see where we can cross. But you can clearly see that if you layer them on, all right, and here, it doesn't matter if you're looking at broad money or base money, by the way, you can see the price is just, it's all that you see. The price just comes out of the multiple. That's why I keep saying 90% of what is going on in the markets have nothing to do with the Federal Reserve. It has to do with the network effect of Bitcoin itself, which is a wild thought. But the power curve, the power law can unlock this for you, give you some comfort, and show you. Yeah, there's going to be times where we're over, under where we should be. By the way, if you think about this in terms of price now, it's similar. We haven't hit the trend actually this cycle. So again, it just shows you that it doesn't really have to do with what they're printing or not, right? So if they were printing a bunch, a while back, and Bitcoin was, supposed to be at this higher level, that is the black line, it never got there. Whereas the price got there 3 times. See, the price intersected the black line 3 times. It's just information. It's not going to tell you that the Bitcoin price will definitely this is base money. I need to go back to broad money, which I was just showing you before. Right, so it's a little bit more broad money being printed than base money. But it's just information. It's not going to tell you. It's not going to unlock where the price is going. This looks closer to the price action, right? We kissed the trend line 3 times, and now we're below it. All you can do is look at the relative levels of risk. We're right on target. We're right on trend. The people that tell you what's going to happen next week, next month, I don't know, you can pay them. Maybe they'll make you money, but it's a crapshoot. It's 50-50, right? It is gambling. It is gambling. This is why I'm the anti-newsletter guy. If I had a nickel for reading how many times the U.S. is going bankrupt by the shitty newsletters that I was reading back in 2011, 2012. They might have a sovereign debt crisis, but I have no interest in giving people fear porn while there's more important things to do in life. More important things to do in life. So let's go back to the curve. Actually, I haven't checked in the chat a little bit. Good morning from Cincinnati. Daniel, thank you for tuning in. Possibly NYC Huddle. Sorry, I'm a little bit late to the chat here. I was on a rant. Oh, actually, I got to get off. I got to get on another call here in a second. But let's just look again. Price, regression, trends. By definition, 2/3 of the time is 1 sigma. Okay, so let's look inside these bands. All right. These bands are much wider back in the past. Not much wider, actually, but depending on your zoom. And now they're here. So let's go out till the end of 2026. This could go lower, could go higher, but these are the 60 percentile. Let's even put 80 percentile. Getting close to 2 sigma. Okay, 70K would be a very low percentile event. 192K would be a very high percentile event. Still a big delta for sure. Now let's go out to the end of 2026. 100K and 261. All right, those are the relative levels of risk. Pay attention to those. Don't pay attention to wacky stock to flow things. Yes, the trend can go lower, but it's always going to adjust with itself. And stay calm. That's my message. I got to jump, guys, for a call here at the top of the hour, but thank you for watching, and I hope to chat with you tomorrow.